Hi trader community, once again welcome back to my channel. So today's video will be regarding the Bollinger Bands and RSI strategy in option trading strategy. So hope you are very well and enjoying with your weekends. As you know, in the trading world, in professional of trading, there should be a specific strategy that in order to be very successful in any field now, whether it is in stock market trading, crypto trading, forex trading, any business or any activities, field of your project, we need strategy in order to achieve those goals and objectives. In same way, in option trading also, we need very strong and accurate, more winning strategy in order to be a profitable trader. And I would like to remind you that it is not for the beginners who are new in the stock market, because it is very risky to take for the beginners in the stock market, especially in derivatives, because it involves lots of risks and it can blow up your capital within no time. So this is only for the experienced trading people who are in the market for more than 1 year. From this video, you will be learning the basic understanding of RSI and Bollinger Bands, how to plot Bollinger Bands and do the settings, how to plot RSI and do the setting in the RSI, real world examples and tips to be a very successful trader in the stock market or forex or cryptocurrency market. I've made several videos regarding the RSI and Bollinger Bands, which involves basic to advanced level. If you have not watched that video, please do look at and watch that video so that you can understand this video very easily. So we will recap this a little bit about introduction of RSI and Bollinger Bands. Bollinger Bands measures help us to measure the volatility in the market. Market has to have some volatility so that we can be trading according to the volatility. If market also moves in the low volatility to the high volatility and again to low volatility. Suppose the market is very squeezed, then it is considered then the market will be in the sideways or with the low volatility. So in order to trade in option with the low volatility, what we have to do is we have to write the options instead of buying the options. For the RSI, in oscillator or indicator, it helps us to measure the strength of the trend. If the market is moving to the high volatility, whether the volatility of the market has strength or not, we can be measured by the RSI. That's why I have combined these two indicators in order to have a very perfect strategy which can give us around 60 to 80% of winning accuracy. So now what are the combination strategy of Bollinger Bands and RSI? The number one condition should be that Bollinger Bands should have a squeeze or contraction before breakout. In anything, when market moves to the, we are about to move to the high volatility, first it should have a low volatility. So market should be in the low volatility or contraction of the Bollinger Bands with upper and lower. The tighter it will be, the better the high frequency of the volatility will be there if it breaks up the upper or low Bollinger Band. So what we have to do is we have to identify whether there is a contraction of Bollinger Bands before moving the breakout level or not. If there is a contraction of the Bollinger before, if it is very tight or blending, then it will have a very strong breakout than those who are having lesser width and the higher distance between the low Bollinger Band and high Bollinger Band. It is somewhat like wide, and it will have a very less strength breakout. So let's check for a few examples in the some other conditions. Like for the bullish entry, if you want to buy a call option, you have to wait. First, we have to wait the contraction or skews of the volatility. After a certain time, the market will give us an alertness. Price breaking upper Bollinger Bands with bullish candle, Marubuzu candlestick should be there. Here you can see that the upper Bollinger Bands, after this squeeze contraction of the Bollinger Band, it have appeared a bullish Marubuzu candlestick where it broke the upper Bollinger Band and it closed above the upper Bollinger Band. And then what we have to do is we have to look for the RSI. Those the breakout has a strength or is a fake out, we can identify with help of RSI. If RSI is above 50 and 60, then it shows that the breakout has a very strong moment and it has a strength. So when do you have to enter the market? After breakout of this upper Bollinger Band with the bullish Marubuzu candlestick, what we have to do is we have to mark the high of this Marubuzu candlestick, and whenever the follow-up candle, next 1 or 2 candles, when it breaks the upper high of that Marubuzu candle, we can enter into the trade by keeping stop loss below the low of Marubuzu candlestick with 1 or 2 points buffer zone. So we can enter and write the target should be as per your risk to reward ratio. In the opposite side, condition for the bearish entry. Same as the bullish entry, what we have to note down is first we have to see the squeeze or contraction of Bollinger Band, and there gives an alarmness. Then whenever the price breaks the lower Bollinger Band with bearish Marubuzu candlestick, it gives an alarmness. You can mark the low of that candlestick, and whenever the another follow-up candle breaks the low of that Marubuzu candlestick, and also the RSI provides you the confirmation that it is below 50 and 40. I prefer below 40. You can enter the trade by keeping the stop loss above the high of that bearish Marubuzu candlestick with 1 or 2 points buffer zone. So you can enter in the trade and write trend downwards. Keep the target as per your risk to reward ratio. You can buy put options. So now we will look at the chart and we will do some testing. Okay, now see here we have skews Bollinger Bands. Market is in the sideways. Moreover, the RSI is between the 60 and 40, which we have already discussed that it will be sideways market. Now let's check when does it breaks. Okay, now you see that there is breakout of the upper Bollinger Band because the market has been under the contraction of Bollinger Bands. Now RSI also moved above 60. Now you see here that the candlestick is a bullish candlestick which broke the upper Bollinger Band. RSI is also above 60. Now what you can do is you can mark here high of this candle and low of this candle. Now it broke it. You have already entered into trade. See? So now you can trade your stop loss or you can exit from the trade because it has entered back to the Bollinger Bands. Or what you can do is you can exit when the candle closes below the middle Bollinger Band also. Again, we will check for the another. Okay, again you see that here now, again it is under the squeezed contraction of Bollinger Bands, and suddenly RSI went above 60. Now this is your alert candle. Mark it high of this candle and low of this candle. So what you can do is, now you can enter the trade when the high of this bullish candles break up. So let's check now. See, you have got the beautiful trade. Now you can trail your stop loss here, low of this ring. And now again you can trail the stop loss here. Again you can trail the stop loss here. Again you can trail the stop loss here, low of this candle. Now again you can trail the stop loss here, low of this tree. See, again it broke out. Now you can trail the stop loss here. Again now you can trail the stop loss here. So very powerful strategy. Again you can trail the stop loss here. Okay, now your stop loss has been hit. You can exit from the trade. Here you see again it broke it. It is under the contraction sideways. Bollinger Band is under the contraction. And suddenly RSI took the support and broke above the 60. Now this candle will be your alert candle. What you can do is you can mark this high of this candle. When it breaks, you can enter the trade. Keep your stop loss below this red candle. Then you can enter into the trade. So let's see whether you can get the trade or not. Let's put this risk to reward ratio. You will keep 1:2. Okay, 1:2. So let's check it. Now you can trail your stop loss here. Now you can trail the stop loss here. When you see this formation of swing low, you can trail your stop loss. Here you have not got the target, it has hit your stop loss. Here there is a skews of Bollinger Bands. You see sideways. Now suddenly RSI went below this 40 level, took the resistance at 40. Now this is your alert candle. This is your alert candle, and here should be your stop loss. Now what you can do is you can go for short. Risk to reward ratio, what you can keep is you can keep 1:2. Minimum risk to ratio should be 1:2. Otherwise, you will end up in the problem. Negative, your portfolio will be end up in. So let's check that you have got the. Now you have found the swing low. what you can do is you can trail your stop loss till here. Now you can trail your stop loss here. Okay, again, now your stop loss has been hit. So you are out of the trade, but still you are in profit. So that's why trailing stop loss is very important while you are doing trading. In order to achieve your target, trailing stop loss is very important. Again, you can see that here the Bollinger Band is under the squeeze. Tight squeeze. You see the RSI moving above 60, and this is your alert candle. This is your alert candle. Mark high of it and put your stop loss below this. What you can do is you enter into the trade when the high of this Marubuzu Bullish Candlestick breaks out. Keep your stop loss with 1:2. So this will be thing that you trade. So let's see whether it gives you trade or not. Now you have entered into the trade. Now you can trail your stop loss here. Now you can trail your stop loss here, so that, okay, now you have hit your stop loss, or if you have kept your stop loss here, it won't be hit. Okay, that. Okay, it has been hit now. Again, you see that you can enter into the trade here. Again, RSI went above 60. What you can do is you can, this is your alert candle, this candle. What you can do is you can enter into the trade. Put the stop loss below this. X:2 ratio should be minimum of 2%. Okay, here, let us check now. Here you have hit your stop loss. Okay, now you see that here again, one Marubuzu candle has been formed. What you can do is, you can mark this low of this candle and high of this candle. Whenever it breaks, you can enter into the trade. So let's see whether it is broken or not. So it is not broken, so there is no validation. You should break within by the 1 or 2 candles. Again here, you can see RSI is below 40. What you can do is you can enter into the trade. Like when it breaks, you high of this candlestick as your stop loss. Risk to reward ratio 1:2. Now you can trail your stop loss with this string. Okay, now you are out, but you are not in loss. Still you are in profit. So again you see that, but there is no contraction, so we won't be trading this. Well, okay, you see, again, there is a contraction. The Bollinger Band has been broken by a bullish candle. Mark this high, mark this low as your stop loss. We enter into the trade. Keep your target as 1:2. Target 1. RSI also above 60. Here you have lost the stop loss. You are out of trade. Here you see, again there is a skews of Bollinger Band, and suddenly you can enter into the shorts till after breaking down of this. Keep this high as your stop loss. Risk to ratio 1:2. Okay, let's check now. Until your stop loss here. Okay, you are out of trade, but still you are in profit. Again, you see here is a contraction of Bollinger Band. What you can do is you can enter into the trade when this low of this broken, because RSI is also below the 40. You can enter with risk reward ratio of 1:2. So let's check. See here you have got the profit, or what you can do is you can trade here, and now you can again trade here. Again you can trade here. Okay, now you are out of trade. Again in contraction period, tighter it is, better it will be. So what you can do is, see RSI have crossed above 60. What you can do is you can mark this high of this candle as your alert. Now you can get into the trade. keep this low as your stop loss. What you can do is you can write 1:2. Meaning what? Okay, let's check. We have hit your stop loss here. No problem. Here again, what you can do is you can enter into the trade. Here, somewhat skews of Bollinger Band. Certainly, this is broken. Now, what you can do is you can enter into the trade for the short. One is to do. Till here you can do. Now you can kill your stop loss here, swing of this, and now you are out of trade. Still you are in profit. And again here you see Bollinger is very tight. This will give you a very good trade. What you can do is mark this high of this candle, low of this candle as your stop loss. And you can enter into the trade for the long. Keep your stop loss your target is 1:2. We check out what can score at it. Right. It is hit your stop loss. Here also you can enter into the bearish trade. This high is your stop loss. We can enter into the trade. Okay, now again there is formation of you see there is formation of squeeze candlestick. It has broken up. Mark this high. With low of this candle as your stop loss, what you can do is you can enter into the trade. Keep 1:2 as your target. But it has hit your stop loss. Again, we will get an opportunity. Okay, now RSI across above 60. See? And again, we can enter into the trade by keeping this low as your thing. Very tight, it will give you very good amount. Here, what we can do is risk to reward ratio, this 1:2. See, you can achieve. Now what you can do is you can trail your stop loss to the swing low Here it is. Again, you can write the trade. Again, you can trail your stop loss here. Okay, you are out of the trade now. So you can find a huge profit here. Let's check again. Okay, now again here you see that RSI is taking support at 60. Squeeze Bollinger Band. So let the Bollinger Band above 60. It's not like you know. We have to see clear breakout. Again, you see here, squeeze. You can enter into the low by keeping this as your stop loss. Keep your risk to ratio as 1:2 and tell your stop loss. Here it has hit your stop loss. Again, you see. Again, you see. Here, RSI is taking its support here. It's very strong candle. What you can do is whenever it breaks, you can enter into the trade by keeping this low as your stop loss. Risk to reward ratio 1:2. See whether you can achieve it or not. Now you can kill your stop loss here. Go this. Again, you can add more position. Again, it breaks up. The here no loss. Again, you see here, again, Bollinger Band is under squeeze. See again here, what you can do is RSI is crossing above 60. What you can do is you can enter into trade. Keep this low as your stop loss. Risk to reward ratio should be 1:2 minimum. So let's check it. Now what you can do is you can trail your stop loss here, seeing low. Here you are out of trade with a profit. Again, Bollinger Band is under squeeze. Now here you see again, it has broken with this candle. What you can do is you can go here, keep this swing high because it is small margin. Keep 1:2 ratio. Stop target. Now trail your stop loss here, swing high. Okay, you are out of the trade now. Alright. Again, Bollinger Band is under squeeze. RSI above 60. Here you can mark this. You can work the entry. Keep this candle ratio low. Keep breaks to reward ratio 1:2. There it is, hit your stop loss. Again you see, here again it is started. Mark this high as your swing high. Keep this as your stop loss. Keep breaks to reward ratio as 1:2. Okay, here it goes. See, now you can trade stop loss here. 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 See, almost target you're beating. Trading stop loss is very important if you want to make a very big profit from the market. Now again you can trade here. Keep on trailing with the single. Again you can trail here. Here you are out of trade. See, that's why how you can write your trade. Okay, now we have seen the example, real example in the chart, how you have to trade. And there is no 100% guarantee accuracy in any indicator or strategy. You should keep in mind that if people say that they have 99% accuracy, 90% accuracy, it never happens in the market. Assume that this is sure as a scam. If people say that they have 100% accuracy, 90%, it doesn't happen in the market. Even the professional trader, even the big institutional, they don't have 100% success rate. They lose some of the time, let's say 20 to 30% they lose in the market. But thing is that at the end, 60 to 70% they make money. So in the same way, in any strategy, it is important to remember that if you have winning rate of 60 to 70%, that is enough. You can make a big money in your life. From my experience, it will be like that, and you can make big profit by focusing in only one or two strategies. And I would like to share you that tips, the best time frame for the intraday option trading, it is better to use more than 50 minutes. Because in lower time frame, it may give you success rate, but it will hit your stop loss very often. So 15 minutes to 1 hour, I consume that for intraday is very best. And for the swing trading and positional trading, I use more than 1 day time frame in order to enter into the trade and analyze the market. Now, what I would like to suggest you is that please do backtest, just as I have done here in the trading view. You can do backtest at your own, develop your own strategy, 1 or 2 strategies. Don't develop too much of strategies, because this will give you more confusion and it will destroy your psychological and mindset in the trading. So once you develop 1 or 2 strategies, then what you do is you backtest it more than 100 times. In your chart, you can go to the history, charting candlestick, it is very important to do backtest before actually implementing in your red-less trading. Plus, what you can do is you can also start paper trading. As I have done before, I get involved in the option trading. So it will give you more confidence, more in your strategy. And once it improves, then you can apply in your real-life trading. So it can save your psychological discipline. Plus, you can save your capital, most important thing. Many traders lose their capital in the market without doing any backtesting and developing their own strategy. They used to listen to other tips and calls. It never happens. If you want to be very successful in your trading career, you have to learn yourself, develop your own strategy. You have to learn to be independent in the market. Only implement if it has more than accuracy. Right after doing 100 times backtesting, you shall be winning more than 60 to 70%. If it is below 60%, then change your strategy, because you won't survive in the market if your accuracy is less than 60%. So risk management, use stop loss and adjust position as per your at the beginning. Stop loss is very necessary in order to protect your capital from the loss, and adjust your position at the beginning once you have done backtesting. Also, paper trading, what you do is you practice with 1 or 2 lots, and gradually, if your strategy gives you an accuracy more than 70%, then you can increase your lot sizes, position sizes. Always calculate risks before trading and stick to it. I will always advise you to calculate your risks before getting into trading, so it will prevent of losing your capital in the market, because derivatives is very difficult and it is very risky instrument. So be careful and protect your capital. And you should have mentally, psychologically stick to your strategy. Don't move from one strategy to another strategy, because it won't give you a very successful career in the trading. So here are the key takeout points from this video. Number 1, Bollinger Bands should have a skews contraction before breakout. It should have a skews. Longer the period of contraction, tighter it is, then stronger breakout will be. Alert price breaking upper or lower Bollinger Band should be a strong Marubuzu candlestick. It should not have a long wick, because it might give a fake breakout and hit your stop loss. So you have to keep in mind. Marubuzu candlestick should break bands properly. RSI should cross above 50 or 60, not less than 50. It should be, if possible, you go for above 60, because it gives a very high rate of accuracy for call buying, and below 50 to 40, I prefer 40 for buying put options in the option trading. Entry when the high or low of the candlestick broken. If it breaks up the upper Bollinger Band, then you should buy for call when it breaks the high of that Marubuzu candle. If the Marubuzu candle breaks the lower Bollinger Bands, you should enter into trade when the low of that candlestick breaks down, as I've shown in the examples in the charting, live charting. Stop loss above high or low of the breakout, as you have already explained. Please do keep buffer zone and use the trading stop loss in order to protect your profit and prevent you from the huge losses. It is very important. I will make one video in the stop loss of trading, how to trail your stop loss, in another video. So thank you so much. Please do learn, practice as much as you can, and improve your trading skills. Don't depend on others, and have a very successful trading in the coming sessions. If you have not subscribed to my channel, please do subscribe it. If you find this video very valuable, please do like and share. Please do support me, and comment in what topic you want to learn from the trading in cryptocurrency, stock market, or forex. You can comment. I will surely bring video what you like to share. Goodbye, and have a very successful and wonderful trading session in coming days. Take care and bye.